Hi, everybody. Welcome back to Kingdom Wealth Creators. I hope you've been enjoying your journey with us. If you're here for the first time, please remember to subscribe to this channel and like this video and share it with as many people as possible. Please remember to watch the entire video to get all the funda you need on what I'm going to talk about. Today, I'm going to talk about something called Sensibull. It is a website which allows a lot of futures and option traders to really understand three things. Those are the three things that I basically look at, and that is one, option data, second, open interest, and third is to build your strategy. And these are the three things that I use Sensibull for, and let's take a look at how it works. Yeah, so here you can see this is what Sensibull looks like, sensibull.com/home. And as soon as you get here, you can take a free trial if you want to, using any of the brokers that have access to Sensibull. And here I use Zerodha to log in. So I log in with my broker. You can see they have Zerodha, Alice Blue, ICICI Direct, 5paise, Motilal Oswal, and IIFL. And I'm going to, you can also do it with Google, but I'm going to use my Zerodha account to log in. And because my Zerodha account is already logged in, it gets in there. Now, as soon as we get here, you can see there's a home, there's a watch list, positions, orders, etc. Here you can see your account details. Now, I'm already using a paid version of this, the pro version. And so you can see here that this is where I can always add to it, change it, and all of that. So I use a pro version. Now, as soon as we get here, there's a couple of things you can see, especially on this side. Okay, if you click here, just it's very easy to use this website, by the way. You see here you have easy options, strategy wizard, strategy builder, virtual trade, expert trades, learning option trading, chat, analyzing data. I don't use all of these. I use three things. One is the options chain. The second is the option open interest. Sorry. And I also sometimes look at the IV chart, but not too much. And the last one is the strategy builder. All right. So I'm just going to open them in three separate windows. And let's take a look at each of these. All right. So the option chain is basically, now, for example, say I'm interested in Asian Paints for this month's expiry, because normally what I do is I either buy or sell a future and then hedge it with a call or a put option, or I might do a strangle, which is I would sell a higher call option and sell a lower put option, right? So those are the two basic strategies that I use. And so for Asian Paints, for example, now Asian Paints is trading at around 2,662. It was seen at 2,860 almost before, but now it's dropped a bit. And suppose I want to enter a hedge a strangle on this. So I'm going to look for potential strangles. Now, what do? If you look at this options chain, you can see some of these have, a dot, a drop of water with a line across it. This basically says that this option is not liquid. So I'm going to avoid such options. And I'm going to take the option that I already entered. Okay, so I'm going to go for the 2560, which is quite a liquid option. If I actually drop this down, I can see what the current pricing on the 2560 PE is. You can see here the buy and sells. And obviously this is reflected real time from your Zerodha account. Okay. And similarly, if I want to take a call option to complete the strangle, again, I'm going to look for liquid options, and I'm looking at actually the 2840. Yeah. Enter at a good price. So if I look at this, I can see which price I should take it in. So this is why I use the options chain. It also shows you in a very simple way where most of the open interest has been built up. A lot of people, if you see this huge bar, this is where the highest open interest on the call side is. That 2,800 is the call that most people have sold. Similarly, you can see where the open interest is on the put side. Okay, and normally you would see them around the round figures: 2,500, 2,600, 2,700, 2,800, 2,900. Now you can do this for different any FNO share, including the Nifty and the Bank Nifty. You can change expiry from 28, 25. In case of the Nifty and the Bank Nifty, it will also show you the weekly options. And this is really great to see what to do, what trading what should I pick up. Okay, Okay, now look at the open interest. This is what is very interesting. Now, some people have asked me, how did you know? For example, yesterday I said that it looks like the market is going to go down from 14,600. And why I said that was because of this data here. Now, this data is basically the call of or the options data. Now, you can see here, these are all the puts that people have sold, and these are all the calls that people have sold. Okay, and you can see a call change, put change. If the put change is higher than the call change, the likelihood is that the market or the Nifty is going to go up. Okay, and you can see the same for the Bank Nifty. If you look at the Bank Nifty here, you can see that the call is about 8.2 and the puts are about 9.0 million. Now, it is not necessary that it will happen just like that, but it is likely. Okay, so this tells me that there is probably a likelihood of going up, but I mostly looks like it is volatile because the data is more or less the same. You can also look at this for data particular to a share. Like, for example, if I take Kotak, I can see that it's trading at 1898 right now. And you can see here that there's a lot of uh, call sellers at 1900. What does this tell me? That 1900 is a very high resistance to break. But it also tells me if, now let me remove this, by the way, this is the current expiry, this is the current month's or January's expiry. It tells me that there's a lot of people who have a vested interest in making sure Kotak doesn't go above 1900 because they've sold the call option here. Now, what happens if it goes above 1900? You will see all these people starting to cover their shorts or the call options. They start buying that. Eventually, especially if Kotak starts crossing 1940 or so, because by that time the premium on this is going to be really bad. So that is the challenge that Kotak, for example, has. Now, by watching this, I can realize that hey, two things. One, I can probably see if Kotak breaks 1900 and sustains, it's probably a good time to enter it because once this resistance fades away, it's all the way to 1000 or 2000, right? So that's one way to read this data. Similarly, if I were to say check Reliance, okay. Now, if you look at Reliance data, so look at this. Okay, a lot of people had sold the 2000 call option before, but now because Reliance has broken up, you can see they sold. People who had sold the 1900 call option, they covered it. People who sold the 1940 call option, they covered it. People who sold the 1950 call, they covered it. Now, people who have sold the 2000 call option are covering it like crazy. And this tells me that most people think that Reliance is going to cross, and that's why they're just working their positions out. So these are quick ways you can figure out where the market might be heading in a particular share of the index, the Nifty or the Bank Nifty. Again, this is not a sure shot 100% thing that will happen all the time. It can happen. There are so many reasons beyond the option data alone that decides what happens to the market, right? The third thing that I use the Sensibull is for building my strategy. Okay. Yeah. Usually, what I do is I would hedge future with an option, or I would strangle the share. So let's take an example. Now I've strangled something called Dabur. So I'm going to get into Dabur. And what I did with Dabur yesterday is I sold the 520, yeah, 20 put option, and I sold the 560 call option. Today, because I saw that Dabur was going up quite well, I also sold the 530 put option. So now I have these three positions. Now the prices might have changed a bit from when I entered them. Let me enter the right price. I think this was at 7.1. Okay, so these were the rough prices. Now, what I can do with this is basically as soon as I enter these, I can see. Normally always take it to expiry. I always try to get my hedges and my options to expire. Now you can see that as long as the price stays somewhere between 560 and 530, because those are the closest hedges, I'm going to look at a potential profit of 26,000 or so. On a margin of 1.88 lakh, which is the return of 12.38. That's an excellent return for another 10 trading days. And so that's a trade that I would immediately take, because if I have the money, okay, if I have 2 lakhs, and if this is a good position to take, that's what I'm going to do. And so that's what I've done. So again, this is just to know what are good positions to take. For example, if I were to take the 500, and then I said 600 at this late timing, okay, I do this, okay, let's look at this. Now, why I wouldn't take this position is look at the return, 6% or 1 lakh of investment. So this is a good position, because the likelihood of Dabur going to 500, 600 is very low, but it is not a worthwhile return. 6% when you can easily get 10%. So for strangles, I normally look at a minimum of 10% return. But futures and options, when I hedge it, again, it's a different story. For example, let's say, look at Britannia. Now, Britannia is something that I took up. Let me try to build my strategy here. First, I'm going to do the futures. I bought the Britannia futures, yes, and I sold the 2,800 call, yes. Now, not the put. Now, I did this. When I did this, the price that I bought the futures were for 3,550, and I sold the call option back then at about 30. Now, look at this. This will give me a predictive answer as to how much I can expect as a return. So, for example, you see for a margin of 1.72 lakhs, if Britannia hits 3,800, I can expect a return of almost 56,000 rupees, or almost 30% return on my trade. And also, I can see what's the position I would make a loss at. So this one shows me that if it goes down to 3,520, that's where I can make a loss, because the 30 rupees on the option that I sold hedges me or protects me from a loss until this point. Now, of course, I can always add more hedges and do a lot more things, but this is basically what will tell me what positions. So the option chain tells me which options are liquid, which options to buy or sell. It gives me a good idea. I can also see very quickly what are the resistance and supports here. The open interest shows me basically the call data and the put data, the options data, and it tells me what are the potential positions I can take, whether the market is going to go up or whether that particular stock is going to go up, where the resistance are, and the change. That's what is most important. And the change in the data tells me whether the market is going up or down. And finally, of course, the strategy builder that will tell me, what is the what is the strategy that I should pick up? What are the potential profits or the losses that I can make when I take a future hedging option or a strangle? Now, like I said before, the cost of this is roughly 1,040 per month if you are taking the pro version for 6 months, and the cost of the light version. I don't think the light version is good enough. Often, always take the pro version. But that's about it. It's a very good tool for anyone who's doing futures and options trading. And if you have any doubts, you can always follow up and put it in the comments on this video and ask those questions. All right, thank you so much for watching that. I hope that was really helpful for you as well. Sensibull is very crucial for my trading and investment portfolio, and I'm so glad there's such a website that exists. If you're interested, you can always try the trial version for 7 days, and then if it really works for you, you can always switch to one of the pro or light versions. I hope you enjoyed this video. Please remember to subscribe to our Kingdom Well Creators YouTube channel, and like this video and share it with as many people so they can also benefit from learning about the stock market. God bless you all.